Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm your guest, Joe Smazal, and with me, as always, are your hosts, Tom and Mark.
Dude, I haven't seen you for so long. This is the longest we've gone without recording.
I know. It was 29 days, man. Like, it's been a long 29 days.
We had the calendar with the X's until we had our next recording.
Yep. I had circled on there.
Yeah, we finally got there. So we came with some excitement, which is good.
Yeah, no, for sure. This is a great show we had today, and it was a great way to kind of get back recording for the fall.
Yep. I saw you guys are hiring. What do you need out there? Let our listeners know. What are you looking for?
So right now, what we need is a showing agent. So, man, our showing agents make pretty good money. They can make up to like 70, 80 grand a year just showing places on it. And, it's all for the properties we manage. So, if anyone out there is looking, we need someone for our city properties. Kind of span the south side and some of the north side. Man,
there's a lot of people looking to hire. I had the pleasure of golfing with Workman yesterday. He's looking for someone on his team. So if you're young, hungry, looking to get after it, make some money in the lending space, I know Renovo's hiring. You reach out to Workman directly. We have his contact on the website. You reach out to us. But yeah, if you're looking to get in this game and in a W-2 position, there's a lot of people looking for talent.
Yeah, for sure. If anyone is ever looking, just let me know. I always just kind of circulate around my group, and someone's always looking for whether it be property management or lending or private landlords, whatever it might be. There's always opportunities. All right, so our housing provider tip of the week is I'm watching a lot of people getting in trouble with security deposits and how they're handling security deposits. So if you're in Cook County or Chicago, there's make sure you're following the security deposit rules to the T. I'm watching a big one that people are not realizing right now is in Cook County through the newer ordinance that came out in 2021. You cannot collect more than 1.5 months security deposit. And for the half a month, you even have to give the tenants the option of paying that in payment. So I watched some tenants, they forced them to do a few month lease. The tenants found out about this later, and then they went and filed a claim. They actually asked for the refund of the security deposit to a month and a half. And the landlord said no. And for obvious reason, he was trying to offset his risk, but he also wasn't realizing that this was a law, a rule he has to follow. Tenants went and filed a grievance, and ultimately he got dinged for, I think it was 2 times his security deposit altogether of that full amount. So judge actually really was harsh on him than I thought it should be. But so keep that in mind. And then obviously in Chicago, you have to be paying security deposit interest. And I'm not an attorney, but I would always encourage people to consider the non-refundable moving fee. But then also in Evanston, a lot of people are not realizing in Evanston that they have security deposit laws as well too, like Chicago, and you got to be paying the interest on that. So make sure you're following those. And then the other big one about Cook County and Chicago is you have to hold them in specific banks, specific types of bank accounts. You can't be commingling it with the rest of your funds for your banking or your personal funds or whatnot. And you have to have in Cook County on the cover of your lease or your first page of your lease what bank you're holding those security deposits in. So lots of stuff. If you have any questions, reach out to me. But security deposits, I'm watching a handful of people get in trouble over just not following the rules right now.
All right, it's good stuff. Providing some value there.
Yes. So which is what we're all about.
There we go. All right. Our guest today, just has done so much. Also a fellow podcaster. We don't get to say that all that often. We'll lead off with that.
A few pod guys here.
A couple of pod guys hanging out.
Yep.
A couple of pod guys owns and runs Smazal Apartments. Sold over $1 billion in Chicago real estate with his 12 years at Interra, 15 years in the industry. Without further ado, Joe Smazal, welcome to the Underground.
What up? Good to be here.
I know. This is nice. So we've had you on Zoom, episode 156. Great content, terrible quality. I went back and listened.
I know.
We've come a long way. Then we had you live.
When was the first one?
156 had to be 3-ish years ago.
Beginning of 2002, I think it was right
somewhere around there. So you didn't say anything dumb. It was good. Don't worry, you're fine.
Okay. It's hard to listen to him after the fact. Glad that it aged okay. Yeah, all right.
And then we had you at, I know Jeff Weinberg hooked us up at the NSBC event. Yeah, that was episode 368. So we've had you Zoom, live, and now we finally got you to the Underground. So
flattered, guys.
I got more comments on the live one we did than most other shows. Like, it's probably the top 10 of like people texting me and messaging me about what we talked about. So whatever.
That's a good one.
Yeah, we talked about leasing and kind of the deal flow that day.
Is it like, I don't know whether does it annoy you a little bit that it's hard to, sometimes the engagement from the episode doesn't always even like really track with like how you felt about it. Like some of them get a ton of legs, and then you have a conversation you're really proud of, you thought was going to be awesome, and like it just doesn't get the same level of listens and views and stuff.
100%. We've had a few where I'm like, wow, that was so valuable. And then like we'll have the next one on like, I bought my first house hack. And like everyone like,
And it blows up. Yeah. I mean, I don't know if it makes it exciting or like kind of frustrating or both. Feel you on that.
Content period in general, whether it be an Instagram post or just like videos we make for the website, or we rolled out an entire automatic like price your property management. Like we thought it'd be like, no one has to talk to anyone. Like I got like 3 people to do it. Like, and we blasted out, spent a couple $1,000s. Like no one even cares about that. I'm like, wow, maybe that wasn't the problem I was trying to solve. But like, yes, marketing is like totally like hit or miss.
You got to do enough of it to get lucky every once in a while.
Yeah, exactly.
there you go. All right. So before we jump in, because you're doing a lot of great things, let's talk about the podcast. So real estate, Chicago style. I think you mentioned on yours, on one of your episodes, why you started, but for our listeners who haven't heard about it, why did you start it? What's going on besides just coming after me and Mark? What was the motive behind this?
It was kind of a whim. I appreciate bringing it up. It was kind of a whim. I had been on yours, I'd been on a couple others and had fun doing them. The real reason for doing it was pro Chicago content. Like a lot of the folks that I talk to every day, I'm selling a piece of the city. I'm selling, if you're investing in apartment buildings in Chicago, you have to believe in Chicago. And I just had this like dichotomies where every day I'd have people tell me everything that was wrong with the city, when I pitched a deal. And then my experience in living in the city and investing in the city and running my brokerage business in the city, raising my kids here, all these things was like totally in conflict with what, everybody's just, griping about the city to me all day. I'm like, you know what? It needs to be more pro Chicago content. That's my only rule when I have people on is like, you can't come on here and bitch about the city. It's just not how it's going to go. That was it was like a Wednesday. I told my wife, I think I'm going to do a podcast. And I talked to a guy who produced one that I was on. This guy is Stephen Caban, Full Bars Media, and he's like, yeah, let's do it. And like the next Wednesday, we were filming a couple of them. So I didn't give myself enough time to like back out of it. I guess there was probably, to be honest, there's probably a little bit of selfish motivation to just like expand my audience a little bit. I've got a pretty good network and a lot of great relationships in like Chicago multifamily as a niche, but wanted to be known more as the Chicago multifamily guy for people outside of that bubble. And it's been fun. I mean, I think I've only been doing it for like 6 months or so, but it's cool to have like kind of control on how you curate the guests that come on.
You have a wide range. Like, sorry to cut you off, but we're learning about hotels. We're learning about office leasing. Like, there's a lot of cool stuff in there that like, I'm like, oh, I don't know this person.
That's kind of the hope is like, we've had a pretty diverse group of people in terms of like their experience and everything. It's been fun that way. We'll see. I'm going to keep it going. You guys told me at your event last year, you said 90+% of them fail before the 10th episode. So I'm like,
get to 11.
I'm 100% doing 11. Like if it's 11 and that's it, at least, but we're going to keep it going.
We got to be past that now, aren't you?
Yeah, I think we've had like 15.
Yeah, I thought so. Do you have a regular cadence for the audience?
Yeah, so people are asking like, it must like be taking a lot of time away from your brokerage. And it's not. I mean, I film them once a month. I film 2 in a day, and then we release them once every 2 weeks. It's kind of the goal. We've had a couple like holiday delays or whatever. I'm not letting it like stress me out. And then Steven, the guy I'm working with on it, does all the production, does all the editing of it. I post it on my social media, and that's about it.
Are you chopping it up or using the content for other purposes?
A little bit. We got to start doing more of that, because like the question I asked you guys a couple minutes ago, like what gets traction? Some of them that I felt like we had a really great conversation get like a fifth of the views or something. And it's not, it's not sponsored. It's not like monetary goal from it or anything, but also there's some level of like, there's this data that you get. I'm not doing it so nobody listens to it. I'm trying to figure out like what the best way to kind of cut up the episodes and do some more reels or shorts or whatever they're called.
The crazy thing is you have to be, even though you're just trying to get information, right? That's our whole goal is get information out there. You have to have some level of entertainment too. Yeah. You have to have people like you, so there ends up being this other dynamic that you have to keep it interesting. And that, if anything, I think that's been the fun part, keeping that challenging, being fun and events and stuff like that. So you're not just like another
boring. Yeah, there's enough like kind of like just dull real estate stuff out.
Well, I thought you were going to start dropping names.
No, but in seriousness, like your guys' podcast, you've had 400 episodes recently. You posted it recently on your LinkedIn. I think that it's been incredible in being like technical and giving a lot of tools and a lot of resources and a lot of like really actionable lessons to people that are starting or trying to grow their, myself included. Like I'm in real estate all day, every day for the last 15 years. And I listen to some of the episodes. I'm like, oh shit, I didn't know, like, I only knew that at surface level. And so you've done a really good job in that. I'm not trying to do the same thing. I'm trying to make it a little bit more like kind of profiling people that I think people would want to hear from. And then by way of that, showing, the audience that there's more to Chicago than what you read in the bullshit headlines that we see.
No, absolutely. So we'll link to it in the show notes for our listeners out here who are loyal to us. Like, this is, if you like tuning to us every Thursday, like, this is right up the alley.
Appreciate it, man.
It's on my list. I listen to it.
What about it you think I could do better?
I'll give you some feedback. 30-minute rant now.
Yeah. I got notes. I got some stuff.
I came ready. Yeah, I'm dying for you to ask this question. No, I would we're gonna get into it in this episode. We're gonna ask about what's going on in the market in 2025. I would like to hear more from you. Okay. I would like to hear more from this market more than 99.999% of people out there, right? I would like to hear from Joe Smazal. And right, if you feel uncomfortable about that, then bring in the guys under you in Interra and have them be this whatever. But I would like to hear more from you.
Don't shy away from kind of my expertise in it.
Yeah, because I think think about all the top podcasts you might listen to or YouTubers you might follow. You do it because you like the opinions of the person that's putting the show on, and to take away from that and only kind of shadow onto your guests, you lose a lot of. There's so much more you could be giving, and people tune in because of that. So, and you have so much to say. So.
I feel you on that. I appreciate it. I wanted to get it off the ground. It was a little bit of a conscious thing because I wanted to get it off the ground enough where it wasn't just like me talking. I should do more of that. I agree.
I'll give you this. Me and him got each other to bounce off of each other. If I'm having a bad episode, he can take over. Very rarely do we both suck.
Yeah.
Well, at least as far as how we feel in the show. Other people might be like, you guys suck most of the time, but so it is a challenge. You have to do all the thinking. I might just be zeroed out for a few minutes in a podcast episode and he just kind of picks up, or vice versa. So you do have a much larger challenge when you go solo. If all of us, we all have ADHD, in this industry, it's tough.
I'll tell you, the last one that I just released was Colette English Dixon. I know you guys had her on. And she's so polished and so well spoken. And I had kind of a morning where just a lot going on before that. And I left that episode and I'm like, you just did a shitty job. I listened to them all once. It's all I can take, and I try to for the sake of improving it. And it didn't turn out that bad, because she did so well. It holds you pretty honest to being on your game a little bit. And that's, it's good to feel that way every now and then.
I said this about a year ago to somebody pretty close to Gary Vee. And he said, I said, yeah, I just can't listen to my voice. I hate listening to episodes. He's like, dude, that's the worst thing you could do. You have to listen to every single episode. You have to critique yourself. You have to really dial into, the way you say things, the way you don't say things, the way you might turn away from the microphone too much, whatever it might be. So that is probably the toughest part I've had to do in the last year of challenging myself to listen to be better.
Yeah. I appreciate the feedback.
All right, let's jump into some of what you're doing in 2025 besides the podcast. Because again, you're killing it. For our listeners who don't know, you just went over $1 billion in your career. Not for the year. Let's be clear. 14 years to get there. You had one of the best LinkedIn posts I've ever seen. I think every multifamily brokerage should have that just on their wall of just grind zero, grind zero, grind zero, and then just the slow, steady improvement. And holy crap, here we are 14 years later. Yeah. Talk to us about that journey, right? We covered in the previous episodes. For our listeners who don't know, who are just getting started out there, just talk about that grind from nothing to, okay, I got something here, to I'm the man.
I won't get to the end because that's not how I feel about it. First of all, since it's on the topic, the LinkedIn post was by far the most traction I've ever gotten on a LinkedIn post. I had for a while had a goal of reaching $1 billion in sold. And I don't like to talk about accomplishments, even though, there's a self-promotion that's necessary in my business. It just makes me kind of uncomfortable, to be honest. And I reached it that day. My wife and kids knew that it was a goal. And so it was, it was fun to come home and talk about it. And, in our own way of ordering something to eat and just with the four of us kind of celebrating. It was really cool. And then we're sitting there, and it's kind of one of those things where you're like, all right, what's next? And I'm sitting there catching up on emails in the evening, and I decided to just post that little blurb, and a progression of the sales volume on a cumulative basis over the last 15 years. I tried to be a little bit lighthearted about it. Cool to hear from a lot of people after that, to be honest. It was like, and I think that it was some level of, even though it was like, it's kind of vulnerable for me to do that. I just always have my buddies in my ear, like, oh, real cool, dude. Like, Joe, like this, like this CRE douchebag, like, is posting what he sold again, you know.
That would have been the number one reason we wouldn't have done the podcast, because I was like, my buddy's gonna tear me apart on this. Like, it was.
Even my best friends who are, you know, the hardest on me were cool about that one. They let it slide, which I appreciated. Yeah, basically it was like, you know, the first year in brokerage, I sold like $4 or $5 million worth of product, worth of apartment buildings, and it was in the, you know, months 6 to 12. The next year was like 9. The next year, maybe I'm making it up now, 25, whatever. It's easy for me, or it's easy for somebody to now look at what I've done and say like, oh wow, you sold $1 billion. Like, that's what I want to do. And it's like, okay, well, nobody asked me what I did for a living the first few years of being a broker when I skipped family vacations and, like, you know, worked every weekend, and I had no like balance in my day, you know, got engaged later than I otherwise would have, you know, kind of started all those things that you had. I think that it was just, for me, it was like the guys that we trained, try to teach them that, you know, there's these points of attrition through kind of the life cycle of being a broker. I think that having seen it now and seen a lot of people be successful or you know, kind of take one of the off ramps to do something else, like, I think year one is a big one, because it's just, you've got to work really hard at it. You're really overworked and underpaid. You're not really seeing it click much. You know, it's hard to get that initial traction to kind of get the snowball going. I think year 3 is another big one, where it's like, maybe you've had a taste of the success, but it's not consistent yet. And then I think it skips and like gets a little bit easier. And then maybe it's like year 9 or 10, where a lot of people kind of do something else. They get burnt out from doing it, or they decide it's not what they want to do forever, so it's not what they want to do any longer. But that's why I've been able to be successful doing it, is because I've stayed really disciplined and really consistent, and I haven't chased other things through the time of the last 15 years.
There's like you might know this number better. There's like a 90% drop off at year 5 with multifamily brokers. It's some crazy number like that.
I don't know the number truthfully, but just from my observation doing this, I'm sure you're right. Probably even, I would guess that you could probably make a similar stat in a shorter period of time than that.
Was there ever a point that you were close to it where you thought, I don't know if I could do this? Like, did you have that? There had to be like a deal that fell apart on a bad day after a bad month where you started having that internal discussion.
I'm going to sell copy machines.
I wasn't almost going to quit, but I remember I had like no money and no experience, and I was proposing on this deal that was in Avondale. It was newer construction. This is in 2011 or so. New construction, intended to be condos. Never sold any. It's like a $3.5 million deal or something like that. Did a good job. I thought I did a good job in the pitch. My mentor came with me at the time, and we did a good job. We left the meeting. This guy wanted to sell. It was like a 4% fee. It was a different point in time where you weren't really like competing on every deal. Like, it felt really good that we were going to get this deal. And at the time, there was like one sales comp because there was so little sales velocity. And I put the one sales comp in, and in the context of doing the pitch, I'm a pretty, in this case, it was stupid. I'm a pretty trusting guy, and I'm like, in the course of doing the pitch, I made a comment like, the sales comp, there's a buyer that we know, they're active in buying this type of stuff, and I didn't say who it was, but like enough to say like, and so the guy just called the buyer, sold him the deal. I saw it close, and it was just, I guess, I wasn't going to quit, but it was.
Did you call him?
Yeah, it was like, I called him as a follow-up, and he told me he was under contract, and then I saw who it was. I don't think I called him after it closed. I'm not a guy that, like, whines when something doesn't go my way. It was a real, like, kick in the shins at that point in my career, because I really could have used that deal. And so that's the first thing that comes to mind. But I wasn't going to quit. I think in the last few years, you have to really, like, now that I have consistent book of business and everything, I've kind of like, I don't know how to say it. Like, I almost had a doubling down recently where But it wasn't just because, oh, I'm gonna be more aggressive, I'm gonna do this. It was because like, I'm like, man, can I do this forever? Because, now I'm about 40 and it's like, I don't know. I'm not a guy that if I don't want to do it for the next 10 years, why am I going to do it for another year? And so I had some moments, truthfully, in the last few years where I'm like, can I like be on, sometimes you feel like you're on a hamster wheel. It's very tiring to like always have your foot on the gas. And I've come to the realization recently that I've got a lot of gas in the tank and I really like to do it. And it's a fun, rewarding business. And I'm going to keep at it for a long time.
That's awesome. All right. So right now, 2025, what are you seeing out there? I know it's a loaded question, but just give us an idea of, you're dealing with a ton of buyers, a ton of sellers. You probably have more insights to the north side of Chicago than anyone listening to this. Just give us maybe that 2-minute overview if someone's asking you, hey, what do you see in the north side of Chicago? Yeah. Some guy from California calls you and asks that question. What are you telling him or her?
Not to be a broken record from when we had the live event, but some of the same dynamics are still in play where there's a really strong rental market again this year on the north side of the city. And a lot of my business is in kind of like best locations on the north side. I cover the north side pretty broadly, but it's in those neighborhoods that are really like cherry locations. I don't know, I get maybe a little bit more excited about them or something like that. Rental market's really strong. There's very little new supply coming online. The neighborhoods are incredibly vibrant and alive. There's restaurants are full, like the parks are full. All these reasons why people want to live in an urban setting are like showing up again. The buzz is back in the city. And so it's created really strong top line revenue growth. That's been the quality of the market that's helped it maintain sale velocity, maintained activity. There is definitely a bias towards good buildings, good location, that flight to quality. That's where the market's certainly the most active, through my lens. It's not easy, and that's kind of a good environment for a broker because if it's too easy, then you don't really have an opportunity to like show your value and why people hire you and to make sure that you get out in front of things that you perceive might be the pitfalls or through the deal can help kind of massage a situation that gets tough. So I think it's been a pretty good market to be an apartment broker on the north side. And I think some of that also is like interest rates have been in a little bit of a tighter band, and there's been probably a little bit more like parity in people's perspective on where they are and where they're going. Even when we're in an environment where interest rates are going down, which, maybe we're starting that. I'm not smart enough to know exactly where they're going, but like if the opinion is that they're going to go down dramatically in the relatively near term, it creates like this paralysis in the market because on both sides of the spectrum, a buyer's like, well, deal's going to pencil a lot better if I've got 4.5% rate versus 6.5% rate, and a seller's like, well, maybe then it would make more sense to refinance, or maybe the pricing will be better because so it creates this kind of like let's wait and see dynamic. But when there's a little bit more, when there's a little bit less volatility and a little bit more consistency in where people think that they're going to go, it creates a market where we're not debating on where they're going to go on every deal. Mark's selling this, and it's like, well, I think if it still doesn't work out, it's all right because in 6 months, interest rates are going to be 100 basis points lower and be able to sell it for more anyways. Forget it. Anything that comes up, and you think the same way because you're like, oh, this thing came up on the inspection. I'm not in love with this deal anyway. I think something will look better in 6 months. I probably filled up the 2 minutes that you asked for, but that's what I'd say is going on, or that's what's gone on in the first 9 months of the year. Right now, in the middle of September, with just this little tick down in rates, not to contradict what I just said, but a small tick down in rates, it's really helped bridge the gap on a few deals where you were right there and you see, interest rates come in 25 basis points or whatever, and it's enough, to get it over the hump. So if we see them kind of just slowly taper down, I think we'll be in a really good environment for the next 6 months or a year.
What are some of the struggles you're seeing getting deals across the finish line, right? You just mentioned, some of the strengths, but we've heard a lot more deals falling apart than we have in recent years.
Yeah, I think it goes back to what I said a couple minutes. I think we're on kind of fragile footing on both sides, where it just didn't take that much to upset the apple cart for somebody to say, you know what, I'm not that into this deal. Or the seller to say, I'm going to kick the can. I'm going to wait a little bit, forget this buyer. Less so any particular, like, you could say, oh, we had appraisal issues because we couldn't find comps, or we had inspection issues, or, the typical things that would take a deal sideways. I don't think it was as much that. I think it was a lot more of just the psyche of the buyer and seller, which is a lot of the business. A lot of the business is just the expectations of the two parties. And, I think that was the reason for more deals not working out.
You've closed some nice ones this year. We were talking offline. Let's talk about, you had the big one in Rogers Park. It was 90 something units. You're assuming the buyer's assuming a crazy CRB loan or whatever it was. Like, walk us through, like, this sounds like it could fall apart 100 different ways. Right. So talk about how this one, give our listeners some perspective on the deal. Sure. And talk to us about how this thing got to the finish line.
So it was 94 units in West Rogers Park, property on California. And it was owned by a family that had bought it from the West Coast and had, it was just probably not running peak performance. You take the probably out of there. It was like 20% vacant. There were some, physical things that needed to be done. It was a little bit of a more management intensive asset, and it had a CMBS loan. CMBS loans are not quite as common in like the middle market multifamily space. I've gone through a couple assumptions. It can take a long time because all the different bondholders need to approve it, and it's a little bit more of a complicated loan product to assume. We were all kind of like, I was trying to set the expectations for that for everybody involved, because I don't want anybody to go into the deal and think that it's going to be a deal that we get up and down in 60 days or whatever, and just a few more steps and everything. And took it to market in the first week of, our proactive marketing campaign. We had really strong showing interest, which I kind of expected because it was an attractive price per unit, which is always a metric that just gets people showing out. But I didn't know what to expect after that, because there was a kind of a little bit of a turnaround element to the deal. Timing and circumstances, caught a very well-established Northside buyer who was looking for a property of about that size. Was not scared of the management, was not scared of, a little bit of leasing that he had to do, a little bit of physical work that he had to do. Cut to the chase on pricing pretty quickly, and then was just shocked at somebody like he's not the most. He's not like not a fancy Excel guy. I was gonna say not sophisticated, but he's outrageously sophisticated in kind of an old school way. He just like glided through the assumption process. Like, I've never seen anybody assume. Just everything that they asked for, they had within an hour. Everything was like, something that could be looked at by a lot of people is very complex. He always replied as like simply as possible, and that's not in a dismissive sense. Just like, here, this is it. And I should have looked before I came. I think it closed in 75 days. I mean, it had to be a world record for a CMBS assumption. And so it was just an example of like, you try to get out in front of some of the things that you think you could go wrong, and then you have somebody, right buyer, everybody kind of paddling in the same direction, and it was actually relatively smooth.
You're also selling some of your own stuff, though. I know you had to go through the whole new ordinance in Logan here. Yeah. Talk to us about that one, yes. If you don't mind sharing some of your personal stuff.
I don't mind at all. Actually, before I tell you the deal story, I'll say something that I've answered a lot of times that, maybe I can answer a little bit more efficiently to more people listening now. But I believe in what I do. I've seen it create a lot of wealth for people that I work with. So I've been buying apartment buildings for the last 5 or 6 years. My wife and I manage them together, which has been awesome. She's incredible. Like, of course I think she's incredible for my wife, but like from a business partner standpoint, could not ask for anything more. I don't shy away that I buy buildings and that I operate buildings. And I think that it makes me a better broker because I actually know what I'm talking, there's some level of just, you don't know until you do it, I think, in this business, and you don't have the appreciation for the management and, getting the call at night or, kind of all the little things that it takes to run an apartment building. So that part of it, I think, makes you a better broker. But I think that there's a fallacy that like, oh, if you're a broker and you're buying buildings, you must just like buy the best deals that come across your desk and then sell the scraps to your clients. And that it's like, the opposite.
You don't get to $1 billion doing that.
No, well, I mean, so part of it is that. Part of it is just like, okay, if I have a deal that I know we're going to get a great response for, and it comes across my desk as just an opportunity, if I were to buy it and not broker it, that's just fee revenue that's lost. Like that's just that's just like you almost have to look at it as like additional cost of doing that deal, because otherwise, I can sell it. That's part of it. But the other, it's all timing and circumstances. Generally I sell smaller I act as a broker on larger buildings than what I buy. And so there's really not a ton of overlap. But like I've bought buildings from Peak and Kagan and ICM and Drew Brenneman and, brokered by Interra, brokered by Essex, brokered by At Properties. Like none of those deals were like, maybe one of them was off market. And I would much rather somebody want to sell me a building than have to like talk them into it or pay a price to convince them to. A little bit of a tangent. I buy when, we've got money from the brokerage business, when I need, the tax write-offs. And then when the right property comes about, and we bought from some very, very sophisticated operators, have to pay what you have to pay to buy good real estate. Certainly not stealing anything.
Real quick, I want to continue down this because you mentioned buy box. Like, I hate the concept that everyone has this same buy box. Like, we get a list, like someone calls it and like, oh, is this a good deal? And it's like, well, what, like, well, yeah, like this is very contextual. Like you just say like, oh, is this a good deal? Like everyone has a different buy box. This might make sense for someone who has 60 units around the corner there. It might not make sense for you. It makes sense for someone who wants to do a rehab, someone who wants to do made a ton of money and wants to do a cost site. Like it's so loaded. Like it's a loaded question.
That's the beauty of the business too, is three of us can look at a deal three different ways, and you all have three different business plans, and three different time horizons on the investment, three different capital stacks. It's that's why I can make a living doing it, because everything I sell, people are like, deal's overpriced, good luck. And every time 99% of the market tells me I'm an idiot, tells me it's overpriced. And it's the same thing with the buyers. I was talking to a guy that I've gotten to be friendly with. It's one of the biggest owners, probably the biggest private owner on the north side of the city. And he's like, every deal I've bought in my career, and he's bought a lot of them, people always think I'm a schmuck. People always think I overpaid. How could he buy that? Well, over the course of 30 years, you accumulate 5,000 units in prime neighborhoods, and there's a lot of efficiencies of that. You know exactly what the rents can get, and then you are also buying these deals in this case like generationally, and looking at what he wants to own for 20 plus years. Yeah, I mean, I think if I'm looking at something, the first building I ever bought was a 4-unit building that was 1 block away from my house, less than 1 block away from my house, 1346 West Webster. I lived on the 1200 block of Webster at the time. I bought it and I was solving for break even. I was like, I don't want to have to feed it money. And I think that it's going to be as convenient as possible for us to manage. I want to manage it because I don't know if I'll manage everything forever, but I wanted to at least know how to manage it. It's tax efficient too. So it wasn't really about like buying a deal with screaming cash flow. It was about buying something that I could learn from, and that I thought would be a nice nest egg and kind of this like forced savings account. And then I get the tax write-off from it. So beauty of the business is all the different opinions and all the different perspectives that go into these. Especially, I think it's less so in the institutional space, or in even like retail or office or something, where like the leases are more rigid and it just kind of is what it is a little bit more. In apartments, you can have a business plan, you can unlock the rent roll every year, you can really kind of work a deal. I think it's a little bit more in the eyes of the beholder.
Yeah, I hear so many times people come to me like, oh, you're spending too much on rehab, or why would you do that? And it's like, almost everyone who says that comment is not at, it's usually someone who owns like 3 units, right? Like it's like, I'm not gonna really take this like with a grain of salt here.
Well, I always look at paying 10% more, even 20% more is really irrelevant. 20% more than what someone else might think is a good deal is really irrelevant 10 years from now, especially 20 years from now. So you said time horizons. I think that's the biggest thing where people, just think about 3 years ago, how many deals you passed on that you wish you would have bought. Like that's the moment. That's the feeling I always think of. Like, if I pass on this, and am I going to regret this 3 years from now when I think about the deal I could have had? So that gets lost in people's spreadsheets all the time.
I also, this is a tangent again, and I'll get back to the question you asked. Somebody at a conference recently was like, oh, I could never buy a deal from you. Like, I look at all those, they all look expensive. Like, everybody has to overpay to buy one of your deals. I was like, well, first thing that went to my mind is like, as a broker, that's not really like an insult because it means I'm doing my job and maximizing value. But it was around the holidays last year, and I went through an exercise because you have a little bit more time on a daily basis. I went through an exercise through my career and looked at the 250 or so deals, and just very subjectively, just like green or red, is the person happy that they bought the building? Like for them, and again, I don't know if I've got different levels of like knowing exact. There were like 3 examples where I think the person wasn't happy with the building that they bought from me. And, and they were not like I sold them a cat in a bag. It was like they changed their life or changed what they're doing or, had bad luck. And it was not like, so it was just, for me, it was like a little bit, it made me feel good. I want people to, come back and do business with me. I want people to be happy with the experience. And like, for me, it made me feel good that I think that's happening. So anyway, you had asked about, I'm selling.
Yeah. So we talked about you, owning. Let's talk about you're selling you sold one of your own buildings in Logan. Right?
No. So, I guess we'll talk about it and hope everything happens the way that
we can cut this.
Okay, no, I don't want to cut anything. I have 2 apartment buildings. 2 of our buildings are 5-unit buildings in Lincoln Park that we bought at the end of 2021, and we just have we've in one of them the rents went from $2,000 to $3,000 just like organically in the market for 3-bed, 1-baths. The other one was a little bit more kind of like a turnaround deal. And so anyway, we have a lot of equity in both of them. And I just thought I'd keep them forever. I wanted to be one of those guys who never sold anything. Because it's just like, I don't know, you hear about guys never selling anything and like, that's cool. We're doing this with our own money. We're doing it without partners and stuff. So I'm like, I do want to grow it to more of a business, more of something that we could live on in the future very comfortably with the lifestyle that I want to grow the business. I'm ambitious. Like I want to, it's makes you feel alive too. I don't want to be like a bored guy, never wheeling and dealing a little bit. We put one on the market with Matt Fritshaw and Harrison Cohn from Triton, who are guys that I've been friendly with for a long time and think highly of. And a lot of people say like, well, you could sell a 5-unit building, and I could say, yes, I could. But I thought that property needed MLS exposure, which is not what people hire me for. And I also, and those guys have that, as well as having just a good understanding of an apartment operator and, how to sell an apartment building. And so hired them to sell it. It's a little bit backwards, put on the MLS, had all the tours, had a few offers, and we knew we were going to do a trade because we weren't just selling it in a vacuum. So we picked an offer that I thought was the highest likelihood of closing, and it just didn't really end up going that way. It was just 8-hour inspection or whatever, and I don't even remember what they brought up. And then we had another false start, and so it now looks to be in good shape. But we're selling that property to buy a property that's in Logan Square. So that's where your question got. But we had to wait to put our down leg, our 5-unit building, on the market until they were far enough along in the northwest side ROFR ordinance thing where we knew, or we at least had a high confidence level that nobody was going to exercise the option to buy it because the timeframes just don't jive with a 1031 exchange. No. And the property that we're buying is from another very experienced owner known for maximizing pricing when they sell, and we're paying full market price for it. And I said, look, I will buy it. We'll do a really quick, simple inspection at maybe a half an hour in a 12-unit building. And we put up some earnest money that went hard very quickly. And we put up, 6 figures of total earnest money. But I said, I need to trade. It's too big of a slug. It's over a $3 million deal. Like, I don't want to buy it just with new money. I want to trade. So it's like, I understand, we'll work with you on the timing of it. It was just I wouldn't do it again. I would not buy a building in Logan Square again in a trade because it just created a lot of stress. Then we had to sell. We do what I tell people not to do all the time is everybody's like, I want to find what I'm going to buy before I sell this building. So it's like, well, it doesn't really work that way. Nobody wants to be patient. In this case, we had to do it that way because of the ordinance. And it just created a lot of pressure on the sale. It was like, we couldn't just focus on maximizing price on what we were selling because it was not a sale in a vacuum. It was to do this other deal. And then I just had like the pressure of, I've never asked for a credit. I've never missed a time frame. I fancy myself as being a very easy buyer, and I didn't want to not perform, to the standard that I hold to myself. So it seems like, they followed all the steps. They got the DOH approval. My down leg is hard now. It's supposed to close, probably around the time this comes out. So hopefully I don't look like a schmuck and something came up, but
It's going to go against your LinkedIn post of how the deal fell apart.
Yeah, there you go. Couple things there. Like, first off, it's fascinating. Like, it's great self-awareness to be, hey, like, I should be hiring these people to do this job for me, even though I can do this job, even though, I do this job very well every single day, understanding the differences there. And I think most people would not, like, how many brokers think would do that?
we've done it on all of our home, like when we've bought and sold homes. I always hire whoever I think the best. Like we hired Jeff Lowe to sell our house, and Jeff Lowe represented us when we bought our new one. It was worth every penny. And yeah, I believe in focusing on what I'm best at, and I believe in the value of, not to sound like cheesy, but the value of representation as a broker. I believe in that. I believe in having a buffer, and I would have hired somebody from Interra if I didn't think it was going to be as necessary to have the deal on the MLS. Like I thought, so it was $1.9 million or something like that. Building was pretty well, it's like stable. There's some things you could do to certainly improve it. I just figured that the MLS audience was important to have in the process. And the MLS audience, is like harder to identify. So usually people hire Interra to run a really proactive marketing process to a qualified pool of investors. And so this is just a little bit different. And so I didn't want to miss that audience and, save in air quotes a fee, and to the detriment of the outcome.
Is this your first 1031?
Yeah, personally, yeah.
So it's your first one and you're doing it into the housing ordinance. So this is
we're going to do another one. We've got another one that's under contract, a little bit of a different deal, but we're looking for a building right now to satisfy the second, but I won't do it in Logan Square again.
Yeah. All
Well,
right.
what are you looking for? Say that in case
Get
anyone's
out
got
there.
something.
Get out in the universe.
Try to buy buildings like fairly close. We live in Lincoln Park, so within like 15 minutes is like, so our buildings are in Lincoln Park, Roscoe Village, North Center, Lincoln Square. This one will be in Logan Square. I don't like to buy big projects. I'd rather buy it more done. I also think some of the better value right now is in the properties that are more done. I think that the value add is kind of oversold and is like priced to perfection in a lot of cases. And in the same way, I don't want to like represent myself in a sale. Like I'm not a developer. I don't want to go through the time and energy and risk, like, what you're doing, Tom with Chris and Mark, you know how to turn around a property. Like it's not my business. I want to buy something that I can just run and we can do, run our we've kind of like a mom and pop style of running these buildings. Like we have all the systems and stuff. So it's not like antiquated, but it is like, we just want to be nice people and run nice buildings and hold them for a while. In this one, we're probably looking for like between a 10 and a 15 unit building in like, Lakeview, Roscoe Village, Andersonville, North Center, Ravenswood, Lincoln Square, kind of the best neighborhoods in the north side as I see it.
There you go.
One of our listeners is going to message you and you're going to...
Yeah, I hope so. I also I'm not shying away from like talking about that pretty openly. I don't know why, for some period of time I probably did shy away from it a little bit. So something that I'm proud that we do, and it's a big part of our lives now, and it's a big part of how I see like the next 20 years of my life going. And so, if that offends somebody, then
It shouldn't. Like you said, it makes you a better broker. For us, it makes us better property managers because we're investors, and vice versa. It makes us better investors because we're property managers. Same with you on your side. Like, own that. That's huge. So
the guys that I care about, their opinions have been complimentary of it, I guess, and that's encouraging. Somebody will be like, well, don't tell anybody you buy. It's like, I don't think you really get it then.
What else do you see in the next 5 years for you? So you're growing this side of it, brokerage side. Like where 5 years from now, where do you see Joe Smazal standing?
I want to be, this is September, with this first trade, we'll be at like 40 units this year. I want to be at 50 units by the end of the year, which is like a very attainable goal. And I know that we'll be there. I want to buy 2 buildings average, per year for the next 5 years. We'll buy like 6 flats and stuff, especially with new money. It helps me to do it on an annual basis because then you get the benefits that we do, cost seg KF, we do the cost segregation and, so, to have 1 or 2 a year, depending on how the brokerage business goes that year. It's also just like, it's an amount of money that I feel like I can save for and pace for. And so 1 to 2 buildings a year. And then, probably, after this experience, probably a couple other trades to kind of grow the business and like unlock some of the equity that we've built in these buildings that we've done some things to or owned for a handful of years or whatever. And then I'm trying to have a little bit more fun in my like daily life in real estate. I've just, there's been times in my career where I got, let myself kind of get too bogged down and not appreciate all the stuff that's really fun and all the good people that are in this business. And so trying to do a lot more brokerage, same type of stuff, not same in like a complacent way, but same in a focused way, middle market, upper end of the middle market. I like the firm that I work at. We've worked at Interra for over 10 years and maybe over 12 years. So, that is kind of like more of the same, but just putting a smile on my face a little bit more sometimes through the daily, work day.
Well, I think a lot of people through their 30s, I just kind of got over this not too long ago, is you're always wondering what's going to happen next. Yeah. When the reality of it, like for me, I have a successful property management company. It spins off some good cash that I can turn around and invest in real estate, which I love to do, and I think I'm pretty good at.
Yeah.
It's like, that is the formula. I'm good for the next couple decades. Yeah. I'm good.
If your 22-year-old self said this is where you'd be like,
oh, totally, dude, totally.
But
you got to remind yourself every day.
Throughout your 30s, you're always wondering, like, hey, is it going to be this more? Am I going to get into institutional stuff? Am I going to stay here? Like, is this like, you just kind of question yourself. And I think you start making huge strides when you actually, it's back to that whole book, Gap and Gain. That whole mindset of like, just kind of double down and focusing. And you even said that earlier, and it sounds like you're right on the right path to keep doing it. You have a formula and it works.
I think there's a little, like, maybe I fell victim a little bit to kind of like the like hustle culture. Like I'm a hardworking guy and I'm disciplined and I'm a little bit of a busybody. Like I like to feel productive every day. I would just be too hard on myself if things didn't click, and not in an outward way. I would like I would just wear it, like, and it would just kind of like stress me out. And then you have a couple weeks where like things just didn't click, and you're like, fuck, man, I'm stressed. Like I'm just I wouldn't show. I'd try not to show it, but I'm sure it showed. And then recently, a buddy in real estate was telling me, how he felt like he was kind of playing Monopoly a little bit. And Monopoly is like my favorite game when I was a kid. Like, and I'm like, and we are. And like, you think about it, like, what would you rather do? Like, I go to the best neighborhoods of the city, not just the best neighborhoods of the city, but I go all around the city. Like the other day, it was 70 in Chicago, so it was easy to like feel good about it. I started my day in Lincoln Park, went to Lakeview, went to Ravenswood, went down to Hyde Park, went back to like North Center or something. And like, the city is just like, and I'm meeting people that are impressive people. One of those stops is like to one of our buildings to check on something. And like, what would you rather do today? Like, and the answer is nothing. But like, if these, some of these emails where people are, not yelling at you, but, demanding information, and we need to, bring me down, I wouldn't have had the same appreciation for the day. But this is what I want to do, for the next 5 years. I want to enjoy it.
And I think we've talked about this before too, is celebrating the moments. Like there's too often I'll close on a property in the middle of the day and I'm busy and it's like now it's a remote closing. It's like you just don't even appreciate it. Later on they're like, holy shit, I closed on a property today. When most people listen to like the show would be like, I closed on my first property, that becomes their biggest like win of the year. It's like you start taking some of those big wins for you, what your volume you're hitting, these buildings you're closing, the people you're meeting. Like to me, those are all things for me. I try to, and you have to be diligent about it, stopping and thinking and enjoying those moments, because that's really, and then the day when you look back, what makes you happy? You just don't want to wait till you're 80 to look back and say, oh yeah, that's right, I met that guy. And it's kind of say, you got to do it on a daily basis. And
totally.
That's probably one of my biggest challenges I've been kind of put in front of me right now for that.
All right, we're going to wrap here. Give us the outlook on Chicago for the next 5 years. I know you're very pro just like us, but give us the spiel.
Crime is down. Yes.
Crime is down. It's wild if you don't get a Slack notification of every package that was stolen in your neighborhood. It kind of changes your perspective on it too. It is. I'm very, very bullish on Chicago. My experience in living in the city and being here, and just like seeing all of these people, getting to meet these people, and real estate's important in the city. It's like, the built environment has a lot to do with how people experience the city and experience the neighborhood and the health of the buildings and the health of the retail corridors and, the quality of the housing stock. All these things, they have a lot to do with like Chicago being a great city. I think that in terms of like what I'm actually qualified to speak, multifamily real estate, I think that we'll start towards the end of that 5 years, hopefully sooner, but, start to see some new supply coming online, which I think is I'm just hopeful that some of the legislative stuff, some of the, friction points in a development cycle kind of smooth out, because the city needs some supply. And, an established housing provider in one of the neighborhoods, probably likes right now. There's not much competitive stock, but it's good for the city. We need density. We need new people coming in. We need affordability. It can't just be people that, afford to live in a high rise we need some supply. But I think the multifamily market's it's gonna be really strong. I think that we've got a few years of runway still where we see solid rent growth. At least we'll pace with the expenses. And I think the political landscape, I'm not qualified to say this part of it, but I just think that things will moderate a little bit. I think there's a lot of desire for that to happen. And I think some of the far left aldermen and the mayor and stuff, I think that people are realizing that if we're going to do some of those things, we also have to have a vibrant business community, and we have to have a tax basis, and we have to have people that want to move here. And, we can't alienate the business in the real estate community. I think that there just has to be like some moderation on that front. And I think Mayor Johnson has not been particularly effective in like getting some of his initiatives done because it's very low approval. And like, I think that shows that it's not what everybody wants. I think the next 5 years is going to be awesome in the city.
Well, one of your gifts for coming on the show is going to be a Brandon Johnson 2026 hat. So hopefully
I've voted left and I've voted right over the years. I really have the track record to say it, but it's just that is so far left. It's just too far left, and I don't think that represents what people in Chicago.
It's hard to get people to follow you. Like, we all know the aldermen run the city for the most part, and the mayor could be just that much more powerful if he has them behind him, and they haven't for a while. So it's tough.
Well, and the dynamic also is like if you're of one particular party, like you can't agree with anything that somebody from the other. It's just like it's toxic, man. I don't think it can last forever though. So.
All right, you ready to wrap?
Yep.
Let's do it.
All right, what's your competitive advantage? How have you been able to do this while so many other people wish they could get $1 billion?
I think I've been really disciplined and very consistent in my activity, and I've seen the byproduct of that is always always having a good kind of fresh track record, having all the relationships with people who are active, and I'd say that.
Yep. All right, what's the one piece of advice you would tell someone that is yet to buy their first property here in Chicago?
Buy a property that they would be happy to own for a long, long time. Don't buy something that if the market conditions change and you can't like flip out of it, or, something changes in your life that, you feel like you have to sell a building in a short period. I would just try to buy something that you feel like you'd be happy to own for a long time.
What do you do for fun?
I got 2 young kids. This is probably a repetitive answer. I don't remember what I said last time, but a lot of it's like I like being a very involved dad. I like working hard, but then also like having fun with my kids. I exercise to stay sane, and that's kind of like a hobby. I'm a shitty golfer at one point in my life, so now it's like harder to be a shitty golfer. But anyway, totally unoriginal answer. Like we enjoy the city. Like go out to eat, just be out and about.
All right, so you can't name your own podcast, but give us a good book, podcast, or self-development activity you'd recommend to our listeners.
Oh, I forgot about the rap questions.
We know what we should have done. Hold on. We should have.
What's your favorite intersection?
Yeah, we should ask his question.
I was going to ask him that.
Missed the golden opportunity.
Racing in Webster. I've thought about that.
You know the answer
yeah.
to your own book.
I know that one. That one's like, my kid's school, our favorite park, Old Pueblo, Sweet Manny Beach.
Too far from Kelly's.
I'll answer the self-development one a different way. I bought a Whoop recently, and I've been focused on my sleep, and it's been incredible, like the benefit. I feel like I've been a little bit too self-improvement-y in this episode here, too self-reflective or whatever, but the Whoop is in focusing on my getting enough quality sleep has changed my life recently.
No, that's good.
That's huge.
Mark's all into that.
No, I'm all into that. Six hours, 12 minutes last night. I know how much deep sleep I track
You know
every
the whole,
morning.
all the stats.
Sure,
Yeah.
Other than yourself, name a valuable resource to other Chicago investors.
I mean, I don't want to like gas you guys up, but you guys have been, I think, an awesome resource for a lot of people, especially people who, like, I think most of the people who listen to your podcast probably are either starting or they're ambitious to advance. And I think that what you guys, like, the people that you have on and the content that you focus, I say you guys are my answer to that. If that's too cheesy to like promote you guys on your
Oh, we'll take it, but continue. No, continue.
a couple people that I work with an inspector named Mark Wilczak from Secure Choice, and he is very pragmatic to me, and he knows that I have a short attention span in inspection. I'm like, dude, you got an hour. Like, let's just make this efficient. If something's significant, I want to know. If not, like, let's just move on. Open-minded, like he'll kind of follow my lead in that. Attorney that I use is a guy named Scott Weinstein from Field and Goldberg, who has been a real a true resource for me. And in addition to just transacting, Scott Kalkofen from Chase is like as easy as it gets. So I'll plug those three.
Joe, thank you so much. You provided a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Fancy myself as like, I like getting to know people, professional in a couple ways as an investor and as a broker. And so anybody that, thinks that we can do some business together, I'm happy to talk to them. Like I said, I'm trying to promote the podcast a little bit because it's something I've been excited about and passionate about. So if you listen to the podcast, connect with me on LinkedIn. Happy to get to know people.
Where can they find the podcast?
It's on all the platforms, man.
All right.
Did it.
I didn't know YouTube was like the most consumed one. I would have been wrong. I never listened to them on YouTube, but everybody, I guess, listens on YouTube.
Yeah, there you go.
Watch, listen, and share.
Yeah, I've never said that, but I should probably start saying anyway.
All right. Very good. Oh, we got our Chicago fact. Who are we playing for and who's our sponsor here?
All right, we haven't recorded in a while, so we got a whole bunch of new people in there. We're playing for, I'm going to butcher his name, Gerbash Paterkani. Gerbash, we'll go with that. All right, Gerbash, if myself or Joe gets this question right, you'll get a $50 gift card brought to you by today's sponsor, PMPC Architects. So PMPC Architects is Prashant. So Prashant's also been on the show as well, too. And he's an awesome architect.
This one's hard, and I apologize in advance. So, Lincoln Park question.
Then at least we don't have to make if we.
Racine Weber.
What was my favorite bar as a 20-year-old? No. Lincoln Park changed its name in 1865 to Lincoln Park. That was after Lincoln was assassinated. Before that, what was it called? And your options are North Chicago, Lake Park, St. Joseph's, Jefferson Square.
I would say Lake Park.
I'm going to say North Chicago.
Lake Park.
Bam.
Yeah, there you go. You got a 50-50 chance.
I got it right by association.
Well, the township.
No, you guys are a team.
Yeah.
You guys are a
dude.
team.
The township is Lakeview for most of that area, isn't it? So like that was actually I thought it was Lakeview. That's what I was answering, but it ended up being different. But it worked out good.
At some point around there, like you still see some of the transom glass on some of those.
The Kenmore building you sold us has the other address or whatever, right?
Yeah. I think it was probably around the same time.
In Lincoln Park, there used to be the cemetery there on the south end of the park, and they had to stop putting people there because the water level was just pushing bodies up.
Oh shit!
6 feet deep, and all of a sudden you see the top of a casket. This is like in the probably around the time it was Lake Park.
No bueno.
So, but all right, awesome. Well, Joe, thanks for coming on. Listeners, thank you. Man, what a great show this was. And congratulations on all your success. And we're just excited to have you back on your third time's charm. But listeners, if you know someone that'd be a great guest, like Joe here, we'd love to have you on the show. So let us know yourself, someone you know, make a recommendation, make an introduction. You can reach out to us either straightupchicagoinvestor@gmail.com or find us on Instagram. And we'd love to have your contact or yourself on the show. Again, we got to entertain and we have to inform. So bring someone that can be both. So Joe, thank you. Tom, thank you. Listeners, we'll see you next week.
Thanks, fellas.
Thanks all.